Morning, Steve here in Chicago with the morning grain comments. Well, happy Friday, and hope everybody has a good and safe weekend. Certainly, the numbers of vaccinations in the U.S. is climbing, which helps us get closer to the point where some of us can go back to somewhat of a normal life, and also we can see an increase in demand for fuel and food. I think outside the United States, especially in Europe, they're taking a step back in vaccinations, which raises concern about especially energy demand into those areas. So we kind of have to watch that pretty closely. We're also watching Fed action on inflation, interest rates, and just unemployment numbers and how quickly we can get people back to work. In the grains, we're dealing with continued liquidation of the markets going into month end, quarter end, and lightening up some of the risk exposure going into the critical USDA March 31 report. After the report, I think we'll start trading weather. And right now it looks like much of the U.S. Midwest will have good April weather for planting of the corn crop. But we continue to see net drying and conditions across the northern plains. In fact, late next week, we could see temperatures in the northern plains as much as 25 degrees above normal. Our weather guide's long-term forecast continues to see dryness in the northern plains, and we also could see a little bit of dryness this summer in the Midwest, especially in August, which raises some concern about our soybean crop. We should get the corn crop planted okay, should have enough showers to produce an okay corn crop. It's just the main thing is we need record yields in order to offset the tight supply here in the U.S. As far as bullet points, we're also watching some dryness across Brazil. That'll continue and probably lower their corn crop. We're also watching a little bit of dryness in Europe and in the Canadian prairies. China is not in the nearby market for corn and beans, but they are starting to pick up some buying of new crop corn. They bought 60 Panamec cargoes from Ukraine this week for October and November. The Argentina soybean crop is still rated only 7% good to excellent versus 31 last year, and their crop number they estimate at 44 million tons. We also note that the Brazil soybean lineup is at 17 million tons with about 11 million tons loaded for March. The Dalian numbers, corn a little bit lower. We've got meal higher with better feed demand in the pork side of things. And we also note in the futures market, we're seeing some unwinding of long soybean oil and short soybean meal spreads. We also note that vegetable oil prices continue to sink lower worldwide, which is weighing on soybean oil prices. And there's also talk that Argentina soybean oil is cheap enough to work in the U.S. West Coast. The Argentina corn crop is rated 26% good to excellent versus 22 last week. And we noted that yesterday the hog report was positive to hog prices at these levels, and we expect a higher opening. That could also filter into a higher cattle market. Resistance now is at 124 versus the 119 where we're trading. So we'll be watching how much people want to liquidate out of their positions before next week's USDA report. We'll put a longer-term eye on the weather conditions, especially here in the U.S., and we'll also be watching the funds and what they want to do as far as their net positions going into the summer weather. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.